Welcome to another video from AlphaTradeZone, and I hope you're all doing well. There have been some interesting price movements over the last few days, and we're going to look at them in this session. We're going to cover Bitcoin and Ethereum in this video, and we're going to analyze the market as a whole using supply and demand and other analysis tools to show the areas of interest that we want to keep an eye on. So with that said, welcome to AlphaTradeZone, and you are in the trading zone. I've been looking at this market over the past few days, and there's different price movements that it's been printing, and it's been very interesting seeing this playing out in front of me. So I want to just show you what I think this market is going to do once it breaks this squeeze pattern that is forming, and where I think it will go. So let's start out by marking these zones. This is the order block at the top side. I'll show you why in a second. We can see this top side small range that had these wick candles. See a wick down there, and it bounced again off of this support, and it broke the support, so it created this market structure break. And what this did is it created this order block at this candle that preceded it, and then price retraced from that. So that was a very good exit for any entries around these bottom demand zones. And this created the supply at this top side. And we can see over this side too, this candle was the one that preceded this. Yeah, this is the one that preceded the big upside here, the markup. So what this means is that this creates an area of interest for buyers, and it will likely face great resistance. We can see here, price retraced back from the top, and it went up to the supply again. So on the first time either supply and demand zone are hit, they're very likely to reject, and they may wick from the downside, so we got to be careful to place our stop losses if we do any entries here. From the bottom of this wick on this candle that precedes this big price action here, and we want to do that minus ATR on this candle. So what that means is we see 3,100 here, and we do 29 and then 600. We can see the basis of it around this zone. That'd be a stop loss, and imagine this here was our entry. We could see price broke this MSB here, and we may be looking at this previous zone. This is one that preceded the big price move. We could say this may be another zone, but there's a lot of price action already in this area, and this was a big area of demand. Now, even if price did stay above this zone, it still wouldn't make us any losses because we just missed a trade, which is not a bad thing. It's better that we lose the trade than we lose money. As I said before, this demand zone was created. This is how we mark it out from the top of the body and the bottom of the wick, and we did the opposite for the top side, and price retraced into it, and it went to the upside. Now I'll mark out an entry, possible entry in this area. I'll place it here because that's where we would have seen potential when it broke this MSB. So this would be the take profit, and this would be the SL with this bottom of this demand zone minus ATR, which would create this stop loss for us, and that'd be a 2.84 risk to reward ratio. Now if we wanted to do 1% risk on that trade, we would make 2.84%, which is a very nice return. And even if we're hitting break even or even less, that's still a very profitable trade if we get them consistently and we make entries like these. We can see price did retrace from the supply zone, but it didn't go back to this demand zone. It stayed above this level, and we can see this main bottom side wick off of here shows the bounce that price made off of this trend. So we see this trend on the bottom side like here, and we see another trend on the top side too. And what we can see here, which is very interesting for us, is a squeeze. So a squeeze means that price is being compressed, and it has one option to either go to the upside or downside. And there's lots of rookie investors and also big investors too looking at this, because price is likely to go in either direction and continue in that direction if it has validation. Now, what I mean by validation is it needs a lot of volume, it needs to retest, and it needs to break either this demand zone or supply zone with valid candles. Now, for it to be valid and for us to say that it will achieve more upside, you'd have to achieve the top of this supply zone plus ATR, or that's just how I would do it. I mean, it just has to be confirmed that this is a good zone to enter, and same with this demand zone. Imagine if we had this level that down here we marked out earlier and it came below here, we could do a breakout trade for the downside to these order blocks down here, and we can place a stop loss above this demand zone plus ATR. ATR is very useful. It's a indicator that can help with our stop losses and just help us keep our profits without being stopped out just by the edge of this wick. Imagine if we wanted to enter here and put a stop loss just below this bottom, we could be stopped out like a lot of traders here. A lot of traders were stopped out here, which is sad to see, but that's how the market goes. So this average true range indicator helps us a lot, just finding the right stop losses for our levels. And now we want to make sure that we don't have any bad entries here, non-profitable entries. So we want our stop losses to be as tight as possible and our take profits as far away as possible. And this is a very good trade if we short the top of a range or the bottom of a range and we place a stop loss below this ATR, because that means there's a very big likelihood that if it does break the ATR, it's likely to follow through and go more to the downside. Normally, when it hits a demand zone or a supply zone for the first time, it respects that level and it treats it well. Some people may have been confused about this topside supply zone because you may think it's on this candle like this, but the reason it missed it is because this was not an ordinary price action. It already reached this low before and it created this MSB, so this was a order block for us. And this candle here too, we could say this was another supply, but this was the main top supply zone. We could place many different zones in this area, but what we see this engulfing pattern happen here and it closed below this market structure break. Now it's very easy to show these predictions after prices happen, so I want to make it clear that this is stuff that we can see before this happen, before we can see this price area like here. I want to be looking at this area now, so there are no valid entries in this area. I want to make that clear, or for the time being. This is for the 4-hour range. In my opinion, there's not many entries in this area. The reason for that is this is still within these two trend lines. There's no defined range, there's no defined supply and demand zones on the time frame we're trying to trade. Now, if we wanted to trade a lower time frame, we could find some good entries here. Maybe taking a look at this top side, like let's just say something like here. We could say, hey, that's the top side OB. Let's touch that once and it may reach that again. And we could make some entries like here, but for the time frame that we're using, we're just looking at this major range. As a way to trade, this would be a swing trade. This would take quite a while. It took, let's mark it out. If we saw this, let's say over here, and we saw price moving down to this area, we could place a entry at something like here, 3 days, 16 hours. So we gotta take note of that. We gotta find out our risk for each day. So we don't wanna be risking too little. Let's say this was a 1% risk trade, potentially, and if you did it over 3 days, you'd be risking 0.3, around 0.3% a day, which is quite a small amount. So depending on how you wanna do it, you could either have multiple trades, that'd probably be the better idea in my opinion, or you could have a higher risk. Now the reason I think multiple trades may be better is you may find different setups and just different opportunities to diversify. Now I want to have a look at Ethereum. So I'm going to mark out the zones as I did with Bitcoin. We can see this bottom, this body, and top of these wicks, and then we can see the bottom side too. Now it didn't really create an bottom side demand over here, we can see this low, but it didn't really even reach into this low either. And over here it's still unmarked price territory, so we're going to create this demand off just of this candle like here. And we can also see this bottom side uptrend, and like Bitcoin, there's no squeeze from the top side. We may have thought there's a squeeze here, but it broke this with this MSB, this microstructure break in this area. And we can also see it broke this new high again, and it broke out of this supply zone. It broke out of the supply zone at this top, and that's a very good thing, because this means that if it stays above the supply zone, it's very likely to be bullish. And if it's bullish, that's very good for the price, and we can be looking into these higher zones at this top side. I'll draw a fib, and we can be looking at some potential price targets. See this 1476 zone as our first take profit. If we wanted to enter somewhere around here, we found a good entry. Now let's say there was an engulfing pattern here and it was associated with good volume, then we may want to place an entry and stop loss below this swing high plus ATR. We want our stop loss to be a good risk to reward. So I don't really want to be looking at entries
Oh brother, this guy stinks!
As I said, this is potentially a target, this zone, and also this topside zone here too. Now if Bitcoin stays or breaks above this topside too, or the entire crypto market remains, that'll be very interesting to see. Now if it does reach a low below this low here, we want to pay close attention to this area to make sure it isn't a fake out and it doesn't just dump back into this. If it consolidates here, we may be likely to see more topside. If we do see a strong support at the stop side, I feel like we're going to what we call moon for the near future. Yeah, keep note of those fib zones. You lay a fib like this, you press fib, you go down to here and press the bottom, and you can change it in the settings. So now we've got these zones marked out. We have this MSB here, we have multiple MSBs bullish. I can mark out MSBs all day. This one isn't very significant because it's just out of the blue, but this one is inside of this supply zone. We see here, we saw the zigzag pattern, so it created this supply zone, and it broke further into it, and then it broke through this next MSB, created this MSB, sorry, and then went above it. So unless price breaks this support here, we're likely to see more upside, in my opinion. And as I said before, keep watching these zones and just watch the general squeeze. There's no valid entries here until it hits this side and this side, in my opinion. I really want to know some feedback, so hit me up, let me know in the description. I really want to know if there's anything you want covered. Check out AlphaTradeZone in the description. We have a Discord server, we have Telegram, and we do trading signals, teaching. We have a whole group of traders and masterminds there.
But I do something right, 'cause you're right here by my side. It's just